All right, guys, let us review dividend portfolio C. Right now, it is up $58 for a 5% return. We're going to go over the portfolio, and the theme behind this portfolio is I wanted a portfolio with a little bit more growth. So we saw that dividend portfolio B was just a mimic of my Roth IRA. Dividend portfolio A is the actual Roth IRA, and dividend portfolio D generates monthly dividends. But we're going to quickly go over dividend portfolio C. We can already see that Goldman Sachs is in the lead, 12%. Very interesting stock. It's a bank stock. I know Warren Buffett has a lot of this in his portfolio. Valero Energy up 12%. Scott's Miracle Grow up 11%. I'm quite curious to see what Valero Energy has been doing. I think they did have a good earnings report. Average share price $76, and right now the price is at $85. So a lot of the commodities, the energy stocks, the oil stocks were oversold, just like the bank stocks. And I just wanted to buy up the oil because I know that a lot of the oil stocks do pay dividends, pretty good dividends. So again, Scott's Miracle Grow is my cannabis sort of play, Miracle Marijuana. I'm up 11% on them, and I bought in when the dividend was closer to 3%. I just want to check the average price. I think it was $68. $66. So right now the price is sitting at $74. Scott's Miracle Grow was once a $100 stock, guys. So I still think there's time to buy in if you want a medical marijuana or cannabis stock. I think Scott's Miracle Grocer is the one to go to. I know that Cron has been going up. I know a lot of people like ACB, and I know a lot of people like CGC Canopy Growth. So new residential investment trust up 10% on them. General Motors up 10%. Apple, which did report very good earnings, up 9%. I actually thought when I opened the portfolio, I really thought that Apple would probably be like the number 3 stock in the portfolio, but quite curious to see when I bought it. Let's take a look. 152. And right now the price is sitting at 166. So, Apple's not going away, guys. Apple is actually still a good buy. There's still time to get in. United Technologies up 9%. Nike up 6%. Procter & Gamble up 6%. I think Procter & Gamble did report very good earnings, and the dividend yield, I think, is still closer to 3%. I'm not really sure. But Cardinal Health up 5%. Abbott Laboratories up 4%. Wells Fargo up 4%, A.O. Smith up 4%, and Comcast Corporation up 3%. I just want to quickly check Comcast, see what I bought it, 35, and right now the price is sitting at 36. So the idea behind Comcast Corporation is I just wanted a telecom stock or something like that. All my portfolios have telecom stock. I think dividend portfolio B has Telus Corporation, and I would think dividend portfolio D has like Shaw Communications, and the Roth IRA has AT&T and Verizon. Continuing in the portfolio, is that it? Oh, no, it's not it. Next Era Energy up 2% on them. Very expensive stock, but one of the better utility stocks on the market. There's another utility stock, Consolidated Edison. I think they are a dividend aristocrat. Kellogg Company up 0.90%. Pretty good dividend that they offer. Merit Company up 0.61. I did buy this stock kind of high, but a very, very good healthcare stock. $75.99 average share price right now. The price is at $76. So, is that it? No, it is not. Lowe's Companies up 0.12%, and Microsoft surprisingly in the red, 0.82%. So, I know Microsoft, they reported earnings, and I guess investors weren't really excited. Some investors did sell off, so Microsoft is the worst performing in the portfolio thus far, which is, I would say, it's kind of surprising because Apple did so well. I know Amazon took a nosedive, but the portfolio itself is doing very well. It's up 5%, guys. This is dividend portfolio C. It focuses a little bit more on growth. Let's take a look at the stats. A net cash flow, I did put in $1,000. Dividends are starting to compound a little bit. 161. That's very good to see. Again, total percentage return is up 5%. So most of my portfolios, they're going up 5%. They're going up 10%, and it looks like I bought in just in time. When most of the cash when I started buying was like in that January period, into that late December period when a lot of stocks were oversold. And this is what it's all about, guys. You want to try to get some money into the market when stocks are going down. I looked at all the banks. All the banks were going down. The energy stocks were going down. All the tech was getting into a bear market. Most of the tech stocks were in bear markets. Semiconductor stocks were in bear markets. Gold was going up. A lot of stuff was just oversold, and you got to get some money into the market, but. Right now, the S&P 500 has ran up. I think it is out of correction. It's out of correction territory, and now you probably won't want to buy at this. There's still some stocks I do look at that are pretty good valuations, but again, the whole theme behind the M1 Finance portfolios is to compound the dividend. So, I have a Roth IRA that's compounding. I have three other portfolios that are compounding off the stocks, and I'm thinking about making a dividend portfolio D, which will be like another monthly income generator. So, the Robinhood portfolio, SPHD, that's putting in work. So a lot of projects, guys, that is going into the works. Again, you're watching a dividend portfolio C. Total earned dividends right now is at 161, and the portfolio is up 5%. So that's going to do it, guys, and I'll see you next time.